I want to share with you how I turned what many people call a boring stock into a 5,000-ton plus profit machine in just a few weeks. And that stock is Apple. Yes, Apple, the company that everyone thinks just sits around selling iPhones. What I'm about to show you is how I used Apple stock and a simple option strategy called the wheel to generate real cash flow, build ownership of 100 shares, and set myself up for even more profit as the stock keeps moving higher. This is not financial advice. If you enjoy this breakdown, make sure to like and subscribe so you don't miss more strategies like this. Here's exactly what happened. Back on July 23rd, Apple stock was trading around $212.50. I decided to sell a put option with a strike price of $210, set to expire just 10 days later on August 1st. For taking on that short-term risk, I collected a premium upfront of $365. That money hit my account right away. Now, what does selling a put actually mean? It means that I agreed to buy 100 shares of Apple if the stock fell below $210 by the time the option expired. If Apple stayed above 210s, I would simply keep the $365 as pure profit. And honestly, at that time, it seemed like a safe bet. But the market has a way of testing you. By August 1, just 10 days later, Apple dropped below $210. My option got assigned, which means I was required to buy 100 shares at my strike price. So suddenly I owned 100 shares of Apple at $210 each, even though the stock had dipped further down to $202. For many new investors, that's the moment of panic. You think, oh no, I bought at $210, but it's already worth less. But for me, this was all part of the plan. This is the first step of the wheel strategy. Sell puts, and if the stock drops, you buy it at a discount to where it was before. And remember, I had already pocketed the $360 premium from the put, so my real cost basis wasn't $210, it was $206.35. Now, instead of panicking, I held on to my 100 shares, and sure enough, within a week, Apple started bouncing back. By late August, the stock had climbed to around $230. At this point, I could have just sat back and enjoyed the unrealized gain. But with the wheel strategy, the game doesn't stop there. Once you own 100 shares, the next move is to sell a covered call. That's exactly what I did. I sold a call option with a strike price of $260, expiring on November 21st. For selling that covered call, I collected another $240 up front. That's more cash flow in my pocket while I wait. Now here's where it gets even more exciting. As time went on, Apple stock continued to climb. Today, it's trading around $255, getting very close to my $260 strike price. If the stock hits $260 by expiration, my shares will be called away. That means I'll sell my 100 shares at $260 each. Since I bought them at $210, that's a $50 profit per share, or $5,000 total on the stock appreciation alone. Add in the $365 from the initial put option and the $240 from the covered call, and my total profit on this boring Apple trade comes out to more than $5,600, all in just a few months, using a strategy that is repeatable, controlled, and built for long-term success. This is the beauty of the wheel strategy. You start by selling puts. If you get assigned, you buy a great company at a discount. Then you sell covered calls against those shares, collecting income while you wait. If your shares eventually get called away, you pocket the profit and start the wheel over again by selling puts. It's a continuous cycle that generates cash flow and builds wealth, one step at a time. A lot of people think Apple stock is boring because it doesn't swing wildly like Tesla or some hot AI startup. But boring can be beautiful when you're compounding wealth. And Apple is far from boring when you look at what's coming. Back in July when I sold that put, one of the reasons I was confident is because I believed Apple's stock price would climb into the fall. Analysts were already setting higher targets, and there was buzz building around the next generation iPhone, the iPhone 17. Every time Apple launches a new model, it reignites the upgrade cycle and drives billions in revenue. Combine that with their growing services segment, Apple Music, iCloud, Apple TV Plus, and the company continues to print cash. On top of that, Apple has been quietly making big moves into AI, augmented reality, and health tech. Their Vision Pro headset is still in early stages, but the potential is massive. Apple has a way of entering markets later, but dominating once they do. The same way the iPhone redefined smartphones, Apple could completely reshape how we think about wearables and immersive tech. Add in their fortress balance sheet, massive share buybacks, and steady dividend, and Apple is anything but boring. That's why I love using the wheel strategy on a stock like Apple. I don't have to guess if the stock is going to $260 tomorrow or back to $200 next week. Instead, I get paid for my patience. If the stock goes up, I win big on appreciation. If it trades sideways, I still collect income from selling options. Even if it dips, as long as I'm holding a world-class company like Apple, I'm happy to own it until it recovers. And history shows Apple always recovers. Think about it this way. While most investors just buy and hold Apple shares, hoping the stock goes up, I'm squeezing extra income out of it month after month. That's the edge options give you. And the wheel strategy makes it systematic and repeatable. Sell puts, get shares, sell calls, repeat. Over time, this adds thousands of dollars in extra cash flow on top of the gains from the stock itself. So let's recap my Apple trade. First, I sold a $210 put and collected $365. The stock dropped, I was assigned, and I bought 100 shares at $210. Then the stock bounced back, and when it reached $230, I sold a covered call at $260, collecting another $240. Now the stock is sitting at $255, close to my strike price. If it hits $260, I'll walk away with $5,000 profit on the shares, plus the option premiums. If it doesn't, I still own the shares and can keep selling more covered calls. Either way, I win. That's the power of the wheel. And here's the key point. You don't need a volatile meme stock to make money. You can take a steady, high-quality company like Apple and use it to generate consistent cash flow and big profits. That's why boring stocks aren't really boring at all. They're gold mines if you know how to use them. So when people tell me Apple is boring, I just smile. Because boring just made me over $5,000 in a few months. And I'm ready to keep spinning the wheel again and again, collecting premiums, stacking gains, and building wealth. This is not financial advice. If you found this breakdown helpful, make sure to like and subscribe so you don't miss the next strategy that could put real cash in your pocket.